All right, welcome to the weekly Sitrep. It's great to be back. I'm Wyatt Frazier. I'm a second year at Wharton, former U.S. Army officer, West Point grad, and help Kyle with Sitreps. So Kyle, it's good to be back on.
It is good to be back on, and the weekly sit rep kind of took a hiatus there for I don't know, maybe it's like over a year. I'm not actually sure. Maybe it was longer than that. But it's we have the Substack, but now it's also great to have the podcast back. I think the podcast is a great format, and just to talk about news and happening things that are going on. So, for those of you that don't know me, which I'm not sure who doesn't by now, if you follow the page, my name's Kyle. I'm a West Point graduate, former Army officer. Used to fly Black Hawk helicopters. Got an MBA, worked in consulting for a few years doing M&A, and now I work in the tech industry. So people seem to like my takes on stuff. So we'll continue that tradition here. And much
Yeah,
appreciated Wyatt for helping me do all this.
yeah. Well, we have some really exciting stuff. We won't get too much into it right now, but be on the lookout.
Things are
Things are
happening.
happening with Sitreps,
Yeah.
and
So
we even have a special guest that people have to keep listening to hear, but a special guest that's gonna be on the pod. So today we wanted to talk about three things. The first is the attack by Iranian militia groups in Jordan. The second is defense funds and venture capital funds and defense tech startups. And the third, just fresh off the presses, is Elon Musk's pay package being rejected. So we'll start in the Middle East. First, I do want to just take a second and acknowledge the fact that there were three soldiers that were killed in action. Sergeant William Jerome Rivers, 46 of Carrollton, Georgia. Specialist Kennedy Layden Sanders, 24 of Waycross, Georgia, and Specialist Brianna Alexandria Moffett of Savannah, Georgia. They were with the U.S. Reserve 718th Engineer Company, 926th Engineer Battalion, 926th Engineer Brigade in Fort Meade, Georgia. And the first thing that I obviously think about is like those are really young soldiers. They were reservists. They were going over to somewhere that wasn't supposed to be a war zone. And now three families obviously, do not have their loved ones, which I want to first start off just, acknowledging that.
yeah, I mean it's terrible, and it just goes to show you, like, I mean they're in Jordan right now. They were like on the border with Iran, but still they're in Jordan, a place that really not that dangerous. If you were getting sent there, so
Yeah.
yeah, it's it's
So,
it's
so this attack was a drone. The official word from the Pentagon is that the missile defense systems didn't recognize it as an enemy drone, which is, obviously scary for the way that asymmetric warfare goes. But it was launched by these Iranian-backed militia groups. So, that's an interesting dynamic in the Middle East that Iran has their official, military, the Revolutionary Guard, but they also have these militia groups throughout the Middle East that they sponsor and they provide weapons to. And that's apparently who launched this attack and who's been launching a lot of attacks into the Red Sea and down in Yemen.
yeah. I mean, like, Iran's clearly using these like militias as a way to like exert influence across the Middle East, and they fund them. I don't think they have like full operational control of them, is what I've heard. They all kind of have their own like agendas. A lot of them are just kind of like regional militias and everything, but overarching, like, they don't like the U.S. and they don't like Israel, right? And so they would love to, like, these attacks are designed to try and like push or like coerce the U.S. to like leave the region. And just the fact that nobody has died yet has kind of been, it had like, I don't want to say like a miracle, right? But it's just we've kind of gotten lucky so far. I think I posted on my page like maybe a couple weeks ago, like videos of U.S. air defense artillery like shooting and blowing up, blowing up some sort of like drones that are flying at these bases, right? It's something a lot of people haven't seen. They haven't really seen like U.S. like uh, you know, air defense artillery like getting shot off. Like, I'm sure you've seen like Iron Dome stuff, but um, like for the U.S. to have those systems operational, I don't think it's something a lot of people have seen, and they're actively being used right now. And apparently, they weren't used this time because they mistook this drone for another drone, a U.S. drone that was supposed to be coming back to the base, and it managed to like actually get in and blow up. So it's super scary. I think about if like the Taliban had this capability when I was in Afghanistan, like we would have gotten absolutely wrecked. Like
Yeah.
stuff like this would have happened all the time. Like they were kind of limited to shooting rockets at us and still like managed to like they would shoot rockets at US bases all the time. But if they had this sort of capability, it would have been a much different deployment. So like super
Yeah, it's also, I mean, obviously this is picked up since October 7th, right? And
Mhm.
the conflict that's now happening in Gaza, and obviously the Houthis down in Yemen, who are Iranian sponsored, they've said that they're going to continue to harass shipments so long as this war continues, right? Iran obviously is no friend of Israel, but it presents a lot of problems. I mean, Biden came out initially and said we will respond, right? And previously we've been doing a lot of responses towards these militia groups, both drone attacks, missile attacks, and now there's a lot of concern on both sides about what the response will be. This kind of gets into the international relations theory of this all. Of do we do a proportionate response, right? That we hit back at their militia groups, or do we think that you look back at what President Trump did in 2020 by killing Soleimani, that was definitely escalatory, and there was a big kind of, I think, collective holding of the breath.
Yeah, you feel like they don't. Everybody talks about deterrence, right? And deterrence is like, if you mess with the U.S., there'll be some sort of like the response will be so bad that it isn't worth messing with the U.S., right? And I think a lot of people who are national security observers say that like we basically have failed to have credible deterrence in this area, right? And people feel that they can do this sort of stuff and like nothing is going to happen, so they sense weakness. Yeah, Middle East is complicated, but a kind of vital part of the world where if we withdraw, I think the consequences are not good, especially
Yeah,
for our ally like Israel, like the one Western, style democracy that, that if they were to get pushed out, it would be like a major reshifting of the world order. So
yeah. No, I was just over there in Saudi Arabia and the UAE over Christmas break. It didn't simplify that part of the world at all. I could go
no.
on for a long time about it, but they don't. I mean, it's not a homogenous region, right? It's a difficult place to understand, and it's gonna be very interesting to see in the next week how President Biden responds. Obviously, there's political consideration, there's military consideration, so we'll update you all next week, I guess.
Yeah.
Uh,
Yep. We will see,
so
won't we?
so the next story is looking at defense tech and the venture funding boom that's happened in defense tech over the past decade, and kind of the pessimism that's existing there. So just a little bit of background: venture capital has poured more than 100 billion into U.S. defense tech startups since 2021. But we're seeing that venture-backed companies were awarded less than 1% of the 411 billion Defense Department contracts. So really not great returns, and only a few companies like Anduril are getting more
Yeah.
than 25 million in contracts.
It. I don't know. I see so many vets who want to go work in this industry, right? Because it seems like a natural, like, oh, I use my defense experience, get some business, and work with a customer who I'm comfortable with, and like, I don't know, man. It just feels like it doesn't go anywhere. Like
It's it's really hard looking at the hardware side. I mean, and obviously Palmer Luckey has figured this out, right? They're a
yeah,
company that's, I think we've all seen, the controversy, and shout out to the Vets Club at I think Evan over at GSB for making sure that Stanford stands that up. But um, there's been a lot of pessimism and a lot of cynicism around that. Um, there's software companies. Um, like One Brief, is an example of that. That they've been able to land quality contracts by not doing hardware, right? By doing a much easier to implement software solution. And there's some stuff there, but also the contracting. I mean, it's a 5-year budget process. So in order to get into the hands of the Defense Department, you have to basically be able to survive until you've gotten that contract years in advance. It's not, sign and use that day.
Yeah, you got to get through the valley of death, right? Which is tough enough in a commercial market where there's more like, free market stuff. It's easier to enter and exit contracts, right? But like in the military, it's like the Defense Department's like the opposite of that. So like prior to my current gig, I worked at for like a year and a half at a defense consulting group, I guess you want to call them, called Acme. And they worked a lot with like the like Army Futures Command, Army Applications Lab on basically like, hey, we want to we want to work with all these like startups and everything. And you know, after being there, I was just like, I kind of left like I was not optimistic. I was like, the Army like really likes to admire problems, right? And so they'd have this whole thing like, oh, we want to figure out a way to get like startups to, help us reload howitzers faster, like self-propelled howitzers faster. And these startups come and they give them all these SIPR contracts, right? And I don't think like anything came out of it. Like it was like felt like such like a dog and pony show. Like there were like these technology demonstrations and like generals came and there was like all this like, hey, we're gonna get these guys like a howitzer down and like and they're gonna have it down here at the base in at Camp Mabry where they can like like tinker with it and everything. And I don't know, man. It just I
Yeah,
like
I
when
mean,
you're like this just seems like it's not going to work.
yeah, I mean the numbers don't lie, right? I mean, in 2010, venture-backed companies received about a half of the 370 billion in the Defense Department spend, and it's 1% now. So it's grown. I mean, it's a 100% increase, but it's not pushing to much. So we'll have to keep watching. I mean, obviously there's, like I said, there are some companies that maybe switch to software and start to market that. I think those companies, are potentially doing some good stuff, and Anduril's there. But True Anomaly, they raised 100 million from venture capitalists last month, and they're basically betting on one contract. That's the other hard thing about defense is
Yeah.
if you don't get the one buyer, right?
Yeah. Yeah. We talk about like concentration risk, right? So it's I don't know. It's remarkable. I've heard when I've talked to like VCs or in the defense space, like they just make it sound like it's just super difficult. So I'm not surprised that this is happening. And
Yeah, I mean,
I almost feel there would have to be some sort of like, which obviously I don't want. There'd have to be some sort of like conflict, right? To maybe like really open this up where the Defense Department basically is like, okay, we're willing to take these risks, like kind of like the same thing you'd see in Ukraine. You hope that sort of stuff wouldn't happen, but
yeah, basically, we'd need to realize the processes we are using, right? That there has to be a solution that's so innovative. Um, like I mentioned, we talked to some folks over at One Brief that basically have made a solution for planning that's very easy to implement and it's so easy to use. That people are implementing it. You have to, but with hardware, it's really hard to retrain soldiers, right? I mean, you flew Blackhawks, right? If someone came in and redesigned your cockpit, that's that's not going to be as easy as, putting a new software on your computer, right?
yeah, I mean,
So,
like training cycles and like how you integrate and use hardware, how comfortable like commanders and staff are with hardware doctrine. It's just all like fielding the mic model for like was a massive
yeah.
undertaking.
Yeah, and
For the army.
the, the last bit too is that these companies might disappear and the army can't be going into a war and have a company file for bankruptcy. So,
Yeah, you need a defense industrial base to support,
yeah.
your war fighting.
So, moving from defense, Kyle, do you want to tell us what happened to our pal Elon, who seems to be ever present in our minds nowadays, literally?
Elon's always in the news, right? So this pay package that this Delaware judge struck down. So, maybe a little background context. A lot of companies incorporate in Delaware because they have this whole like business court system, right? That with judges that are super knowledgeable about like uh, how businesses are supposed to be run and like markets and valuations, all this stuff that goes into like running a business. And so the court system is almost like set up in a way where if you know you have like a legal issue, right, and it needs to be resolved, you have like a higher level of confidence that if you go through the Delaware court system, the people who are going to be handling it, you know, like the judges are going to know what they're doing, which isn't the case, right? You know, like how many judges are skilled in like corporate valuations,
Right.
right? How many
Right.
judges know
Well, and
EBITDA?
Delaware, we actually one of my professors was talking about this that so many it's like almost every major company in America is in Delaware, right?
Mhm.
Um, and it started a while ago for this reason, like you said, they got people that were supposed to be skilled. They kind of attracted people to, you know, they figured that this would be a way to expand their tax base. It's turned into like the lingua franca, right? The English, right? You go
Yeah.
to India or you go to um you go to Cambodia, right? And they speak English when they're doing business with someone from Thailand, not because of America, right? It's because that's just the most convenient language, right? So that's kind of what the world's decided. The business world has decided that yeah, that Delaware is the lingua franca, right? It's the English of the business world in terms of courts and corporate formation. So yeah, that's why we're talking about a Delaware court for Tesla, right?
Yeah. So what's going on with Mr. Musk here, right? Is he had a pay package, looks like it was valued at like 55.8 billion, right? So you know,
Yeah,
large amount of money that
and
was set.
zero cash, zero
Yeah, zero,
cash.
zero, yeah, zero cash. So like one way that you know they founders or executives are compensated, especially in tech companies, but in a lot of companies, is they're given a lot. They have to be incentivized in a way that makes sense, right, for them to work really hard because it can be like a ton of money they're getting paid. And so they'll have like, oh, you got to have these like performance or operational targets you got to hit, like financial targets or operational targets to hit, and it like when you hit those targets, you get like equity, right? You get some sort of like cash payment. When I was going through my, like before you like an investment banking internship, you usually do like some sort of like financial training course, Excel training course. And the guy that was delivering it was like basically talking about this pay package. And this was back in 2017. He was like, look at this pay package that there's contract that Musk got. And he was talking about like the options behind it, right? And like how Musk had to hit like certain operational like targets to unlock each tranche of like equity. So like they weren't going to pay him like any cash. He wasn't going to get like a cash like like a cash payment like a lot of executives would get. Instead, it was uh it was like, hey, there were like 12 tranches to vest, right? And a tranche is like basically like think about like a tower, right? And like each like floor is like a tranche, right? And so like they weren't going to pay him like no cash and a dozen tranches of stock options that would vest when the company achieved a combination of operational and market valuation milestones. And so for all these 12 tranches to vest, Tesla, which back in 2017 like wasn't as ubiquitous as today, right? I don't think they'd come out the Model 3 yet. They still had it was just like the S, right? Which
It
was
was a $60 billion valuation
yeah,
back then.
and they were bleeding money, right? Like they had like it was they weren't sure if the company was going to make it. And so they needed to reach a market capitalization of at least 650 billion. So so market cap, right, is like number of outstanding shares times stock price, right? So the company had to go from a 60 billion market cap to a 650 billion market cap. So Musk needed to over 10x the market cap, which is a pretty lofty goal if you're
Yeah,
trying to, you know, for the like only electric car maker uh, in the world at the time. Um, and so like there were 12 tranches, right? But of like his payments that would vest, right? And like each one of them had like, hey, you got to hit like an operational metric, like you got to produce X number of cars a year, or you need to have X number of I mean I don't even know, but like there was like each had an operational metric. And as an example, right, how I was on the receiving end of this was in 2020, I bought a Model 3 and they were so desperate to get these Model 3s out that like they were like calling me and like, hey, we don't have the car you ordered, but we have a similar car. If you come and get it like before, and this was like December like 29th or something, right? If you pick it up before January 1st, or like you have to pick it up before the year is over, we'll give you like a year of free supercharging or something, and like free like full self driving for X number of months, right? Because they were trying to hit this operational goal of X number of like cars, which I'm sure like which
Yeah.
unlock like another pay tranche for Musk here. So I helped contribute to him hitting one of his tranches, I guess. Um, so like on one hand, you could say like yes, the company was like benefiting from this, right? Musk was properly incentivized to like hit these operational targets. Um, but now they're saying like this, like a Tesla shareholder, Richard Tornetta, asked the Delaware Business Law Court to cancel the pay deal, alleging that the Tesla CEO Musk controlled the approval process and that the board misled investors who signed off on it. So it's kind of interesting, right? Like on one hand, if you look at it, you could say these are super lofty goals. Like I remember like in 2017, like listening to this in my financial modeling class before I started my investment banking internship, and I was like, damn, there's no way this guy's gonna reach it. Like they sound like completely unrealistic, and yet he reached them. You
Yeah.
know, so like on one hand, you'd be like, okay, well maybe he did earn it. But on the other hand, like apparently the Delaware court agreed with his shareholder, saying like, no, this like Musk had too much control over like the process, right? It wasn't certifiably independent, which goes back to like corporate governance. Like there's like I work in corporate governance now. And there's supposed to be like sufficient like protections and but for like shareholders and like separations between like executives and the board, which sometimes gets blurred, I guess. But
It'll be also be interesting to see if he can even exercise the options because, you have to pay for the options and you also have to pay tax on the difference
yeah,
between the strike price and the exercise price. Does he have the liquidity? I mean, he
oh,
just levered up to buy Twitter.
he could get the liquidity right there. I don't think there's
He probably can.
well, yeah, like everybody talks about, oh, like you pay too much for Twitter, or the banks are going to own Twitter or whatever. But like he's got like other companies in the wings, like SpaceX. Like
Sure.
he basically tell any banker, he's like, you either lend me this money or I'm locking you out of the SpaceX IPO. Like
Yeah,
it's that simple. So he can always get the money. It's just I don't know. He just likes drama. But
he
yeah, no, it's
does.
super super interesting. Like corporate, like comp thing, right? And like think about how executives are, or people in the corporate world are compensated, right? Like so much of it is in equity, even for like kind of rank and file too. Like you go work in tech and like
Yeah,
you
could
know
you talk? I mean, it'd be interesting to hear. One thing I think a lot of vets coming out of the military, their eyes glaze over, and oftentimes might not even know the difference between something like an RSU, right, a non-qualified option, and an incentive stock option. I mean, these are all very different things, or just pure equity, right? And people
yeah
might be very shocked to learn that you have to pay tax if you're granted equity, right? That money is not the only thing that's taxed.
yeah.
Could
I
you kind
mean,
of walk through? I mean, what does comp look like?
well,
Um,
I mean, it depends on like the company. It depends on like if it's public or not, right? And I don't know everything, but what I do know, right? Like if you work in big tech, you'll depend on the company, right? You'll have like a base salary, which is like a W-2 salary, right? And it's like you get paid it every 2 weeks. And then you also get equity, and you negotiate the size of that equity package. And that equity package is like, oh, we're going to give you like say 100K in equity, for example, and it's going to vest over 4 years. And some companies you have to like wait a year before it starts to vest. Other companies will be like, oh, it'll start vesting like every quarter or something. And it's like, oh, you'll have, if it's 100K granted at like say $100, right? Uh, stock price, right? So if the stock goes down, your equity will go down. Or if the stock goes up, it could, your total compensation could go way up. But there's like tax things that come into play, right? Like, oh, the stock vests, right? And it vests at say 100, or say you got it granted at 100, but it vests at like 120, right? You're going to pay taxes on that $120 if you sell it right away. Or if you keep and hold on to it, it's like you get like short-term gains versus long-term gains, right? And then there's like stock options where like, hey, you can buy if the stock's valued at 100, we'll give you the option to buy it like at, 70 or something like that. And then if you're like in a private company, there's, like, oh, you'll get stock, but it's like, how do you tender it to basically like get liquidity out of it, right? Because you can't sell it on the stock market, and you tender it back to the company. So there's like a trillion different schemes to like to get it. And it's something like you need to pay a lot of attention. Like, is the company private? Is it public? Like, like what's a fair compensation package? It can kind of be tough, especially like a startup. It can be tough to like, like you and I know a guy was, I think, what is he working at? I think it's Anduril. Like he's working at Anduril, right? And like I like helping him look at his pay package, and and it's like trying to value the his equity is difficult.
Yeah. Well,
you know,
I mean, I was talking to a vet that was asking about the equity at a startup, right? And he was kind of mad. He said that, they were giving it options rather than a percentage ownership of the company, right? And spoiler alert for anyone that's not a founder, you're probably not getting more than about 1% of the company, even if
I
you're
would,
really, really good.
I would love
And
to get I'd love to get a percent
it's
of
right.
my employer.
It's even if you're like employee 10, right? Even if you're going to a small startup, unless you're the founder, you're looking at maybe 10, 25 basis points. So like a quarter of a percent, maybe, but that won't be given to you. I mean, you could get it in a straight offering. The problem, and I explained this to the this fellow student here. Um, you have to pay tax. If you're given straight equity in a company, you pay tax on the value of that. It's as if you were paid in cash, right?
Yeah,
The same is true if a company like gives you a house. Like if a company like gifts you a house, so taxes can get very, very tricky. So the reason you have options is, because it makes it so you don't have to pay the tax right away. You don't have this liquidity constraint. So
yeah.
um
Every time I have equity vest, like every quarter, I pay taxes on it, and if I don't sell it, like if I hold on to it and like say I sell it under a year, I will pay short term gains on it if it goes up.
yeah. So, you
I
know,
get taxed twice on it.
yeah, so my friend going to KKR, right? He's talking about his Mongo pay package. And also, complaining about the tax on the carry that he's going to have to pay, right? So that's ownership in the private equity funds investments, but he'll have to pay a tax on money that he probably won't see for about 8 years.
Yeah.
Um, so yeah, anyone that's going into a startup, anyone that's going into a company, pay attention to what you're being paid. Um, it's not all equal. It may have major tax implications, and you might find out that you have a $50,000 tax bill that you have to pay, or you excuse me, you lose out.
That's right.
So last thing I want to talk about, as we close out, people have been asking you a lot about, these MBA. There was this big Wall Street Journal article talking about the fact that 20% of Harvard Business School graduates are unemployed after 3 months. Um, from my perspective, I will say that recruiting here at Wharton is down, from what it was 2, 3 years ago, talking to alumni. Although I also talked to alumni 10 years ago, and they tell me that it's only down for me because I've only been, been in the civilian job market for like a year and a half. So, I think a lot of people are concerned. They're wondering, does an MBA have value? There's a lot of, very extreme takes that, an MBA is worthless, right? And you'll see plenty of those guys commenting on the page, in the
Mm.
comments, right?
Yeah.
Um, but what are you seeing? How's this playing out?
I mean, I would say the tech industry as a whole is not hiring a whole lot of people.
Google
uh,
just laid off, right? I mean, Meta's laying off.
yeah, I mean, like, well, the whole tech industry continues to go through these like they had like all these big reduction in forces last year, and now they seem to have like rolling ones or smaller ones this year.
Microsoft just said they're going to continue to have layoffs. So yeah.
Yeah, I mean, I think there's a couple factors. One is that like a lot of tech companies feel like they overhired in during the pandemic. They feel like consumer behavior. They were making a bet on the future. They thought consumer behavior would shift more online than it is, and that that demand turned out to not be true. And then also the whole AI thing. They're trying to like AI is like kind of like changing. It's going to change the world. So they're shifting all these, like trying to figure out like the right investments to make, and like okay, it's like what's a priority versus not a priority, etc. So, but like from my perspective, I just don't think there's a lot of hiring going on for anybody right now. I think it's more about them like deciding what they want to invest in, and where they're gonna do that. But that's just for tech, like the other two industries like consulting and banking, I think are also industries that hired kind of overhired and are trying to figure out like what the proper mix is, because you know it, the labor market's still really tight, right? So like, and they do expect like rates are going to come down from the Fed, and that'll maybe unlock more activity, and an already like busy, the economy's still pretty busy, right? Like it keeps growing. We got a really good GDP number the other day. It's like over like 3%. So they're like, well, if rates come down, the economy's gonna like shoot back up. All these, all this like trillions sitting in like money market funds are going to come flowing back into the stock market, and companies will want to do all this investments and everything. So they're trying to figure out like what is the right priorities to invest in. And those are three of the biggest industries that MBAs have looked to go into, because they're lucrative and they're hard to get into, etc. Like outside of that, I mean, I when I talk to folks, right, a lot of people like look at LDPs, like the leadership development programs across like a wide variety of industries, because not every industry, right, like is uh facing these same sort of headwinds that banking, consulting, or tech have been facing, right? So you
Yeah.
look at
I
consumer
mean,
products,
yeah,
healthcare.
my friends in healthcare are having no problems landing
Yeah,
jobs, right? Because people keep getting sick, and
yeah, yeah,
yeah, I mean, I think it's interesting. You read that article from the Wall Street Journal, and Stanford and Harvard have the highest unemployment rate 3 months after graduation, which to me indicates, here being at Wharton, having a lot of friends at Harvard and Stanford, some of those students are a little more picky.
yeah.
Um,
They are, they are picky because they'd be given a job offer. And they're like, I'm not going to take that.
right.
It's not. It's not MBB. I don't want to go work for United Airlines. I don't
Right.
want, like I met like when I went to the MBA recruiting thing, there was like I turned down United Airlines offer to go to consulting, right?
Mhm.
And I was like, no, I want the consulting mark on my resume, and like, but like now, like I'd probably take the United Airlines offer because it's like, well, like if I don't, like I'm probably not going to hold out for a consulting job, especially now that like like they've pushed back start dates for some of these like guys like 6
Yeah. Yeah,
ridiculous.
big start rate push. I mean, here in second year, the hiring, normally the way that these MBA recruiting cycles work is you can get a summer internship. A lot of those summer internships yield full-time jobs, not always. Consulting and banking are most notable. And then if you don't get the job, you can re-recruit, meaning you come back.
Yeah.
My advice to a lot of first years is don't stress about the internship. I think you'd probably, from your own experience, echo that. You can always, come back, but this year it was kind of a rare year that BCG actually and Bain both we got on campus. There's a lot of kids that were hoping they could either, tier up, or that they could return to, that they could re-recruit for consulting. And none of those firms were hiring even, they very much overhired. They were pretty happy with their summer internship class. Um, but there are jobs. I mean, I know a lot of kids here that have been pretty picky. I know other kids that, realized pretty quick that consulting might not be yielding the fruits that it had in the past. The big tech was not on campus anymore. And they got jobs at places that are great, like Kraft Heinz or DaVita, or some of these jobs. And Walmart, actually, I have a friend that's at Walmart that he went to uh he got his MBA at HBS actually about 6 years ago. And he says Walmart's frustrated. They won't even go to like top 10 campuses because kids don't want to talk to them.
Yeah, they're like, no, I'm too good for this. I'm not
Yeah,
going to
which
to Bentonville, right? Which kind of sucks because you can build great careers at any of these companies. Like
I
you
agree.
don't have to go work at McKinsey, Bain, or BCG. You don't have to go work at Goldman Sachs. Like you can go build and have a great life, at a corporate and like maybe kind of bounce around like after a few years, right? And just build your career and probably still make a shit ton of money and have, you know, non-traumatic experiences. Uh,
Yeah. And Bentonville's nice. Maybe we'll talk about Walmart more some other day. But I love Bentonville. I'm actually going there in April to mountain bike. So the
I've,
Waltons have
I've,
poured.
I've never been, but like when I was going through my MBA program, like they recruited at Carnegie Mellon and they had like a whole like flashy like thing and like talk about Bentonville, how great it is and
It's nice. It's nice.
scene and
Yeah. So I
everything.
mean, my buddy at HBS would certainly laugh if I told him. And my friends here at Wharton. You know, I mean, I didn't recruit at Walmart, so I don't know, what I'm talking about. But um, Walmart doesn't even show up to Wharton anymore because they say
Yeah.
kids won't talk to them. So there's jobs to be had. I think it's hyperbole. I think kids were used to, walking into the Google hiring event and having a first round interview guaranteed. And now, good luck even finding the job posting at Google or Meta or Facebook or
Yeah, like
Netflix or somewhere.
yeah. So I mean it's so yeah, when you hear these articles, right, like I think people are just, people naturally like are inclined to not like MBAs, right? Because they're cocky, they're young, they get paid a lot, and they can often be your boss, and so like they're rooting for their downfall. But the reality is more mixed, right? And it's
Yeah,
and it's if going to a top MBA is still a fantastically great way to improve your earnings and advance your career. And
absolutely.
MBAs are tied to the business cycle, right? Like you know it's just the way it is, right? So
Yeah. So go to go get good MBA. Honestly, top 20, like we always say. My best friend just got a job at Adobe from McCombs. Meanwhile, I have kids here at Wharton that are, getting rejection emails. So, um,
yep,
you know,
yep.
good luck to everyone still searching for a job. Good luck to those who are going in. Network hard, work hard. So this
Yeah.
is this is this is this has been the weekly sit rep. Kyle, any parting thoughts before we sign off?
No parting thoughts. I'm glad we get this back to get this back up and started, and I'm excited. Like Wyatt said at the beginning, more things are coming, right? So be on the lookout, and we're going to be excited to get those rolling.
Okay, it's just
Do we have the hot take to or
yeah,
the
I
lead?
have it pulled up because Wyatt recommended I talk about this one.
Okay.
So this
All
is
right. So
share
I'll
screen.
I'll
How do I share
I'll
screen?
do like a quick. All right. So this week for Sonny's hot take, Sonny, let's hear it.
All right, so I gotta be able to share screen here. So can one of you guys give me the powers? All right. So I think this is the take, right? It's the take that you wanted me to make fun of. All right, how do I zoom in here? Let me see. Okay, I'm failing here, failing to zoom. All right, well, anyway, this founder. So the reason why we want to pick on this post here is this founder. I'm just going to read this to everyone. He's raised $2.5 million, so clearly a seed stage company from some pretty relatively well-known investors. So congratulations to him. Being a founder really isn't easy. So huge congratulations. Then he goes on this tirade about he's assembling the Avengers, kind of assembling this team of ultra superheroes. And he basically wants a founding engineer that produces 100x of what an average engineer would produce. He wants a storyteller. Actually, storytelling is a really really great marketing and fundraising skill. So don't really blame him. And he wants somebody that can help his content go absolutely viral. Again, that definitely helps with marketing, and somebody like that is worth their weight in gold. Um, and well, he's looking for three people, so it's interesting because he has four squares. I guess him himself is the fourth square. Um,
Maybe,
so
yeah, maybe that's the maniac. The maniac.
And
yeah,
and
he's the
and
maniac. Apparently, he's the maniac.
and he
And
wants someone that's already been creating gold on YouTube, TikTok, or Instagram because they have such low opportunity cost, right?
Yeah.
Yeah, so I came across this post and actually thought about it a little bit because I really wanted to make fun of him, but also didn't want to kind of piss too many people off. So what I wrote, I just trolled him a little bit, right? So I'm like, hey, look, I've got candidate for you. He walks on water, he turns water into wine, he makes miracles, and he doesn't need any work-life balance. Oh, here's the other thing. You want no work-life balance, right? Um, so I was kind of like, okay, you're a seed stage founder, probably pre-product market fit. I know he's pre-product market fit because he's currently still building in stealth. So most people don't even know what the product is or what he actually does. And you basically want the rock stars of all rock stars to come join your team. But you also only raised $2.5 million. So you can't really afford to pay top of the market. So how are you expecting that the best of the best are just gonna throw themselves at you? Um, you know, I can't say that like I'm an ultra successful founder, but I think that over the past few years, I've learned a lot of lessons as a founder. And one of the best things that you can do to attract the best talent, the best possible talent given the circumstances, if you can't pay top of the market, some of the big tech can, is just intellectual humility, right? Is just to know that have a strong understanding of what your strengths and weaknesses are, and really applying some of the leadership principles that we learn in the military. I think that I apply the leadership principles that I learned in the military every single day in terms of how I lead this company, how I inspire people to give their best work. And some of the leadership principles include things like, being selfless, putting your team first, looking out for your team's best interests, empowering people to execute, putting transparency and integrity above all else. Kind of these are the values that are going to attract people that are going to do absolutely incredible work for you, right? And what kind of rubbed me the wrong way about this founder, and I'm sure he's incredibly capable, but what rubbed me the wrong way is like he's positioned himself as, okay, well, I walk on water and I will not accept anyone except other people who also walk on water, and want them to have no work-life balance, because he literally says if you want work-life balance, don't even bother applying. And I'm also not even going to be able to pay you that much because I'm a seed stage founder. So a lot of these kind of things that he's looking for is really unrealistic. Kind of to use a dating analogy, he's maybe a little bit of above average guy. He's looking to date a supermodel. He's like, okay, well, if you're not a supermodel, don't bother swiping right on me. And that's basically why I've decided to make fun of this post. I generally also think on LinkedIn, people have an extremely inflated sense of self worth. And don't get me wrong, right? Like you want to be confident, and in fact, that maybe like one of my weaknesses is I'm a little bit too self deprecating sometimes. But I think a lot of people just take it way overboard the other way. This gentleman was a chief revenue officer of Meow. If you don't know anything about Meow, they reached out to us a few years ago, inbound email, and they used to do this like weird crypto exchange thing where you can take your cash reserves deposited with them and earn like 3 to 4% with some weird like crypto stable coin shenanigans.
Mm.
This was
Kyle loves crypto, so
Yeah.
I'm sure he's already hitting
this
invest.
and this is back when you were getting like basically 0% interest in a bank, right? So like 3 to 4% for the cash reserves is actually really good. So my co-founder and I, we thought about this, like, wow, like we could be getting 3 to 4%. That's actually pretty meaningful. We decided that we didn't want to like just take their word for it and trust this like seed stage company at the time, um, with all of our money. Like even if there's a 1% chance it goes belly up, then we'll never be able to live it down. So it was probably a bad idea. So we decided against it, and they made a bit of a pivot into a neobank. And when there was the whole like First Republic and Silicon Valley Bank meltdown, all the neobanks blew up, right? So if you look at his profile, like he was talking about kind of how he grew assets under management to a first 100 million up to a first billion, which kind of on the surface is really, really impressive. But kind of pretty sure that Meow was really just riding the wave of the Silicon Valley meltdowns. And that's when every single neobank in the world was getting hit up by startups desperately looking to move their money. So you're kind of like starting life on third base, when it happens. So how much of that is really attributed to Chris here, and how much of it is the product of an environment? I don't know, but I'll just surmise that a big part of it is a product of environment. He was definitely at kind of right time, right place, right time. Great day, took advantage of it. Great day, started his own company and raised from some pretty well known investors. Definitely not a small feat, but this job was just rubbed me a little bit the wrong way. So that's it, man. Hope that first review. I don't think I'm that good on camera, but that's what I think. So
That's good. That's great. Yeah,
Yeah,
that's good.
I liked it. No,